hobby me this, hobby me that. And am I a for-profit or am I not? And that just brought back memories of my days as a kid watching Saturday morning cartoons. My favorite was the Batman with his arch nemesis, the Riddler. So those are the good old days, right? The 70s and 80s. If you're a millennial, you probably don't know about those things. You're probably into anime, which I'm not a big fan of. I'm sorry. Trips down memory lane. They're really fun, right? According to Chesney Hawks, nostalgia is an amazing thing. I'm Wayne Scully, and I'm with W. Scully CPPC, where we say taxing you is their job, saving you is ours, so we give you $100. I want to talk about hobby losses today. And, let's define what it is, first of all. Uh, Oxford defines it as an activity done regularly in one's leisure time for pleasure. But what does the IRS think about that? What does the IRS say about that? Well, they say the same thing, except they add there's no intention of making a profit. Okay. It's clear that intent is not always easy to define, but it is an important element determining the application of hobby loss rules as defined by IRC section 183. There are several factors that determine if your activity is a hobby. Let's take a look at some of those factors. There are really 9 factors. Let me just run down a list for you. Number 1, the manner in which the taxpayer carried on the business. The manner in which the taxpayer carried on the business. So if you're running it like a business, then voila, it's a business. The expertise of the taxpayer. Have you immersed yourself in that industry, in that thing that you're doing? Okay, so you've become like an expert. That shows that you're in business. What about time and effort? If you put a lot of time and effort into it, most likely you're running a real business. Number 5, the success of the taxpayer in carrying on similar activities. So if you've done this in the past, it's going to be hard for the IRS to say this is a hobby. Okay. The history of income or loss with respect to the activity. That's number 6. The amount of occasional profits, if any, which you've earned. Financial status of the taxpayer, you, and elements of personal pleasure or recreation. So those are your 9 elements or 9 factors that the IRS will look at. The bottom line is the rule does not allow for taxpayers to deduct more expenses than income generated by the same activity. Losses are capped, and thereby preventing taxpayers from deducting more than their income from that activity, if you will. So the losses that you do sustain if you're in a hobby, if you're running a hobby, if you're running a hobby, not a business, you'll be able to use that to offset future income. So the list above just basically, it's not, it's going to be always be based on your facts and circumstances. However, you should know that the IRS has developed a 64-page audit technique guide, ATG, to ensure that when they look at your tax return, they are able to properly assess whether or not you indeed have a real business or a hobby. Okay, so other than that, guys, hobbies are reported on line 21 of the Form 1040, and deductions are reported as an itemized deduction. So there you go, guys. It's me again, Wayne Scully, and I'll catch you next time. Bye.